Hello. One major issue we come across in merger and acquisition and valuation world is relating to the working capital adjustment. Now, what is working capital? It's essentially current assets minus current liabilities, or cash and accounts receivable minus payables and accrued expenses. Now, why is that important? Well, in a valuation, we typically are looking at a company's future cash flows potential, or EBITDA is generally what we look at there. Now, in that methodology, we're making the assumption that the company has an optimal working capital level to sustain operations without a major influx of cash or without having any excess cash there that's not used in those operations. Now, when you get to a merger and acquisition situation, the value of the company under the same assumption is that working capital is at an optimal level. So after we agree upon a price, there is typically an agreement on what is the target working capital. That is agreed upon at time of sale. A lot of times there'll be an estimated working capital or a target working capital. And then after about 30 to 60 days, you're going to then come back and calculate what the working capital actually was. And there will be an adjustment either up or down, additional cash to the seller or payments back to the buyer based on that difference of target and actual working capital. Now, this can be done. A distribution could be taken right before the sale. However, the downside to that is now the future company is going to have an immediate influx of capital, so the seller is not going to be happy with that. Or the cash gets retained in the company, and then this adjustment is made, and as I mentioned, paid out after a term of 30, 60, 90 days after the closing of the deal. Now, this working capital adjustment is a very common paragraph within a merger and acquisition document. If you have any questions at all about these, please feel free to reach out to myself or our team, and we'd be happy to walk you through and discuss options within the working capital adjustment